gold has flipped twice and volatility is running high. Can we still stick to the range-bound view? And with trade tensions continuously easing, is the bullish momentum for gold fading? Find out more in this episode of As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. So over the past week, gold has reversed direction twice, and bears are now in control. A weaker dollar, lingering tariff uncertainty, and rising geopolitical risks had boosted demand for gold. But stronger than expected U.S. economic data and news that China and the U.S. will hold talks in Switzerland have capped further gains. This week, traders are closely watching the FOMC meeting and Fed commentary to reassess their gold positions. So now, looking at the gold against US dollar daily chart, we see a down-up-down pattern over the past week. The first reversal came last Friday when gold bounced off the lower edge of its recent range near $32.40. Both step in, pushing prices back above the 5-day EMA and even breaking through the upper band around $33.80. But this morning, gold turned lower again, retesting the $33.80 level. A confirmed break below it would bring $32.40 back into focus as the next support. On the flip side, if bulls regain momentum, a close above Tuesday's high would be a key signal. Well, in my view, last week's initial drop in gold was partly due to lower liquidity during China's Labor Day holiday. Ahead of the break, many Chinese investors just trimmed their positions to avoid holding long exposure they couldn't hedge for 4 straight days, putting pressure on prices. Meanwhile, strong U.S. economic hard data like the non-farm payrolls report and soft data such as the ISM Services PMI also weighed on gold. April non-farm payrolls came in at 177,000, well above the forecast of 130,000, and the ISM Services Index jumped to 51.6. The resilience of the U.S. economy has reduced recession fears and pushed expectations for the next Fed rate cut from June to July, limiting gold's upside. That said, gold's sharp rally at the start of this week suggests traders aren't entirely focused on U.S. data. Safe haven demand is still playing a big role. On one hand, rising tensions in the Middle East have fueled geopolitical concerns. On the other, Trump's announcement of a 100% tariff on all foreign-made films into the U.S. has added to policy uncertainty. Both events help spark risk aversion and send investors back into gold. However, the market's mood quickly shifted again after China responded positively to the U.S. tariff move, agreeing to engage in talks. This is trade war fears and weight on gold. Meanwhile, the dollar's choppy performance has made dollar-denominated gold cheaper for foreign buyers, adding some support. So all in all, gold has been swinging more wildly over the past week, but bears currently have the upper hand. The key drivers remain progress in trade talks, pricing of a U.S. recession, and the Fed's rate cut path. After such rapid back and forth, traders now face one big question. Where is gold headed next? Well, personally, I expect gold to remain in a choppy range in the short term. First, while the US and China have agreed to resume talks, a real breakthrough could take time, meaning the impact of headlines may be quite short-lived. Second, the bullish case for gold still stands, supported by geopolitical risks, US fiscal concerns, and long-term pressure on the dollar. Now, zooming out a bit, Chinese participation may be a key force in driving prices higher. From April 1 to April 25, China's gold ETF holdings rose by 70.2 tons, more than combined increase across major Western economies, accounting for 57% of global gold ETF inflows during that period. Adding in ongoing central bank purchases and the path of the least resistance still appears to be upward. As of the rest of this week, the FOMC meeting is squarely in focus. While no rate change is expected, traders would be combing through the Fed's economic projections and Powell's remarks for clues on rate cuts. I mean, if inflation and unemployment forecasts are lowered and Powell sounds somehow dovish, gold could get a boost. But if the Fed sticks to its inflation-fighting message, the yellow metal might face some renewed pressure. So that's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. Until then, happy trading!